The global economy is diverse: mining, commodities, financial services, manufacturing, construction, and even building empty cities and bridges to nowhere. But most modern countries today are becoming more and more concentrated in what they do. Globalization has diminished the diversity, resulting in more frequent crashes that are all in sync with each other. Today, the US and Canadian economies, along with others, are so heavily reliant on real estate to consistently expand into eternity. Nothing bad could come of this, right? You came here for the truth, so let me unveil that for you. Today we are going to look at real estate, and then I want to connect that in with the economy. Let's begin by taking a look at this. San Diego County home sales dropped 17.5% to the lowest level in 11 years for a September, in the first significant sign of slowdown in the market. That's important because San Diego is one of those hot markets, okay? It's been growing. Obviously, in the area that it is geographically, you know that there is only so much they can build. So there's always going to be an inventory problem there, and yet sales are still dropping. That coincides with sales dropping in many other areas as well. So we need to look at these here. There's a lot more statistics if you're interested, but I just want to move on to show you the chart that's involved. On the right hand side, of course, they get into the mortgage rates, which they suggest here are 4.78% on a 30-year fixed. I've seen them higher. Even based on what you'll see here, doesn't matter until you go to that bank or you go to that lender and you actually ask for the mortgage prices. That's what they're going to give you. Maybe you can negotiate, maybe it'll be higher or lower, depends if you want that 30-year. Are you going to get a 15-year? If you're in Canada, it works a little differently. If you're somewhere else around the world, it's differently. How much you're putting down and so on. A lot of factors here to consider. Now, we're looking at this here. It is Prime Global Cities Index. They've done a report that goes into all of these different global cities, whether it's Singapore, for example, the city with the strongest rate of annual prime price growth. They had actually surpassed Hong Kong. While Hong Kong was on a decline, Singapore was rising higher and higher. In the last year, the price of luxury property increased by 2.7% on average across the 43 cities tracked. This represents the index's weakest performance in annual terms for almost 6 years. So we've had this constant and never-ending increase in the amount of how many homes are selling as well as the price of these homes. And there are certain markets, whether we're looking at San Francisco, which is mentioned here, as well as other hot markets that are just constantly seeming like they'll never let up. And that's in the luxury market, but also in the all of the other markets. Now that's changed, and even in the luxury market is starting to see the sales really slow down significantly. Either they don't have the money anymore and the economy is not doing well, or the prices are simply too high, putting it out of the budget. They're saying, "Hey, let's wait a bit. I'm not sure what's going to happen," and so on. So right here, you'll see that San Francisco was the strongest performing city in North America. I mean, there's a boom going on. Obviously, the tech sector has really expanded there. That's Seattle as well. But Seattle's prices have come down a little bit, and you could see the curve at the top of the Price-Shiller Index basically forming. If you can see that, essentially what's happening is that it's just leveled off and started to come down, but it can certainly pick up the pace in no time at all. But not when interest rates are rising. It's very unlikely. Okay, so we'll see what happens. All right, now I want to show you this further along in here. Prime Global Cities Index, third quarter of 2018. Look at this. Now, while it's obviously still growing, it's simply not at the rate it was through this entire time, the slowest rate it's been since 2013. Okay, so you'll see that for yourself, and there is a clear downward trend. At the same time, no coincidence, there's an upward trend in mortgage prices. On the right hand side, they basically put a list here. There's a long list if you want to scroll through it, if you go to the link in the description under sources. But basically, this is Knight Frank Global Residential Cities Index, and they're ranked here by annual percentage change. At the top of the list is Singapore, and Madrid is actually number 3. This one surprised me. Number 4 is San Francisco. Then we get into Auckland, Toronto, congratulations, number 7. all my fellow Toronto family here, 12-month change, 8.5%. Nobody could afford a home here, but hey, who cares? Let's celebrate. All right, and you can go through the list if you're interested in that. You can pause the video to see what we got here. This is the top 15. 5 biggest winners and losers. Singapore is now the city with the strongest rate of annual prime growth. This just shows you a chart form, with Vancouver actually, believe it or not, 12-month change declining. Okay, there's a lot less sales happening in Vancouver today. The prices had gotten too high. There is a downward swing that's occurring. That's not the prices that you need to think of. Have they declined by that much? Has my home now worth 20% less, 10% less? Not necessarily, but this is based on the sales that are happening right now. This could change in an instant. Okay, and now the segue is a quote by Robert Shiller. I'm sure you know him. The Shiller Case Index, or the CAPE ratio. This is, what he's commonly known for, and I'll read that for you. If the markets go down, it could bring on another recession. The housing market has been an important element of economic activity. If people start to get pessimistic about the housing, they'll pull back. They don't want to buy, and there will be a drop in construction jobs, and that could seed another recession. By the way, we're overdue for another recession. Okay, that's not my quote, just so we're clear. That's not from my book, The Money GPS. That's actually Robert Shiller. I know it sounds exactly the same as everything I've been saying, but that's what he's saying. Now, he's not necessarily suggesting that tomorrow there's going to be another recession. He's just pointing out what's been happening and what could happen, of course. All right? And that brings me into this. The world economy. I wanted to give you this chart here to take a look at from How Much, fantastic site, where they've shown us the United States economy, clearly massive. China, number 2. Japan here as well. And basically, as you can tell, the bigger the block is, then, the bigger the economy, essentially, the GDP. So where is Canada on here? Are we even on here, my friends? My Canadian friends. Somewhere on here. Sad. I think we're a little too small. I guess I'll do one of those. All right. Let's get serious. In retail, it's getting harder and harder for the have-nots to join the haves. So they're talking about Amazon and so on being so powerful, earning so much money at this time, getting all the sales. And then you have this. Department stores, chains like Sears, JCPenney, and so on, they're talking about how they're not doing well. All right? Sears, Payless, GNC, and so on. These stores are all going into bankruptcy at this time, and that's going to have an impact on the jobs of those people. Maybe they had pensions with these companies. Maybe now they have to take on temporary work. What are they going to do? Of course, you know how that all leads up into this. Bankruptcies, credit cards, debt. That's all going to have an effect, okay? So all these stores have been closing slowly but surely over the past few years. There's a record amount of store closures now, and it's all happening primarily around retail, but not just retail, okay? So you need to remember that it's not just that one sector that's being affected by this. And then we have this. I could really get upset, and I wasn't going to include it because I know a lot of people they love taxation. I know that, but I'm going to bring it up anyway. I don't mean to offend anybody. If you love to be taxed, then, I don't want to say anything about that. I'm just going to read the article, and that's it. Bill Gates also supports higher taxes on the rich. Do you really think for a second that Bill Gates is getting taxed the way you and I are? My goodness. Bill Gates, one of the richest men in the world, For 24 years, I think it was, he was the richest man in the world. Of course, Forbes list riches. This is a quote, I need to pay higher taxes. Who else did you hear something about this? Warren Buffett, okay, another one of the richest men in the world, saying, tax me more. But of course, you don't get taxed. You don't get taxed. He's suggesting that he's paid over $10 billion in taxes, but the government should require people in my position to pay significantly higher taxes. Look, if they taxed his entire wealth, it wouldn't even put a dent. It wouldn't even put a dent in what the government needs. That's what they don't understand, or at least that's what they're not talking about. He's in no position at all to talk about taxing the so-called rich, which is going to be people making $150,000 a year or more. These are the people who oftentimes employ other people. You tax those people, they take their jobs offshore, they take their jobs and put their money into other businesses, they close down their shops, they fire people, they hire temp workers, they find a way around. Okay, because if a company is used to making, let's just make up a number, $1 million of profit a year, and by increasing taxation, now they're only making, let's just say, $800,000 a year. They're going to figure out a way to increase their profit by $200,000 a year. I assure you, you cannot think that by taxing them more is going to resolve anything. This right here cannot be addressed any other way. The amount of money, this government is so far gone, it's so bankrupt, that if you were to tax everybody at 100% of their income, this would not fix the problem, not even in that year. Do you understand that? That's how crazy this is. That's how far gone this garbage system is, and this garbage monetary system that's stealing wealth from people every single day. It's the central banks that are the problem, not something like this that they distract you with. And this is basically just talking about inflation and how it's picking up on basically everything. U.S. companies are raising prices on everything from plane tickets to paint, passing on higher costs for fuel, metal, and food to their customers after years of low inflation. If they have a problem, if they have to pay higher prices, the corporations are simply going to make the customer pay more. That's just the way it is. I'm going to end the video there. If you found it informative, please give me a thumbs up. If you hate it, if you hate my face, if you hate my voice, if you hate my smiley faces, if you hate Janet Yellen, give it a thumbs down. That's all for this video. If you found this video informative, I know you're going to find my books even more informative. You can actually flip through them at Amazon. There's a link in the description down below, so check that out. And if you're more interested in the audiobook version, you can get that at themoneygps.com.